Hello everybody, welcome to this week's update. Equities are going to open up lower than they closed last week. So the equities are having the week as I had expected them to. And not just a week, because there is also supposed to be some weakness in February. February is seasonal, also tends to have seasonal weakness for equities. And I'm not completely sure if it's going to be the first half of the February or the second half of the February, remains to be seen. But the next days, this week and the first half of the next week should be somewhat bearish. And of course, cryptos are reacting, and that's what I want to talk to you about actually. It's the cryptos. I also want to show you, this is Bitcoin here. Oops. And these lines that I have just by mistake pulled, I can make this on daily so you can see this better. I can also make these more visible. This orange line, that's the barometer, the way it is. And as you can see, that barometer also is suggesting some serious weakness. In Q1, the barometer is showing that for March, okay? I am not completely sure if that's already the weakness is playing out as we speak, or if it's going to play out, this weakness is going to play out in February. It's probably going to be sooner than the March. I've showed you in the other videos how this barometer for Bitcoin especially tends to, things tend to happen sooner than the barometer was projecting. So I showed you that in the past. So this weakness, I think, is going to happen in February at the latest, and we are like 10 days to February, so we might have started playing out this weakness. And there is something really special I want to show you. So this is, I've just switched to another chart just to have it clear of the lines and drawings. So you can see I can even turn off the moving averages, so just see the trend lines. So I think these trend lines are somewhat important. Of course, there is other trend lines as well, but I want to talk to you about this because what I think is happening, if the weakness is already going on, and I think it's a good case that that it's already going on, then I think the best thing that could happen for the cryptos, the best thing arguably, is if we undercut the 80,000. I know right now you maybe feel like, oh my god, no, that's bearish. But actually, I think this is the most bullish. The reason why I think so is that I have reported you in the month ago that I see ascending wedges here actually. Because this seemed to be like one ascending wedge, and it's inside of like a bigger ascending wedge. This is like an ascending wedge within ascending wedge, and for Bitcoin, if like these things, I've always seen them kind of work, and especially now, this has been going on for like 2-3 months now. Yeah, like 2 months, right? It's from 21st of November. It's 2 months, but it's just like I think it's a good chance that this thing is supposed to break down, meaning we are supposed to undercut the 80,000. And if that doesn't happen now, if we are gonna go up lower, higher, and I don't know, like something like that, then it's going to really keep bothering me. I will feel like this thing is supposed to break down any second. So if we break down right now, that would be the best thing, and it also would be no-brainer if I see below 80,000 Bitcoin in the coming 2 to 3 weeks. Then it's going to be no-brainer for me to really come in strong. And also, I'm pretty sure that Ethereum chart is also going to look excellent. My areas are going to be hit, those that I have also drawn like a month ago or a month and a half ago. They haven't been hit yet. And a last thing that I want to mention is this trend line basically. I have drawn it. I can actually draw it because there is 2 ways to draw trend lines, from closest to closest, or from the top of the wicks. So let me just draw it like this. Yeah, this is beautiful. Look at these hits, and this is a close on that. It's basically recapturing of the trend line. So this red trend line, I think, we should hold it as a support. And the best would be if we basically break down to the trend line like sometime, maybe not in the start of February. That would be 70,000. I think that's a little bit excessive, but it could be like 70 to 80,000, meaning like 73k maybe at the end of January. At the end of January, this trend line is on 73,000. And that would be, and then I think that would open the door to violently come back again to the range. So this would be, I think, the best case scenario, even though it seems on a first glance horrifying, but that is the point of these moves. Like the structure, the way it's positioned, like I do not trust this structure at all. For instance, I've been watching also Brian Beamish, who I really respect by now, and he sees a W here, like oops, like this is a, oh my gosh, like this is a W here, and that we are supposed to now come back up. But to be honest, the way the structure is, I do not trust it at all. I do not trust these ascending wedges in it. So I just wanted to let you know, and I am now going to be bidding a little bit of my time to redeploy my cash, and I intend to do it during actually during February, and also during the very late January, so the second half of the next week I think it's the time, and then during the January, and it remains to be seen whether the first half or the second half, let's see. But for now, I do think the best would be to break below 80,000.